everybody. I'm Carol Wheatcroft. I'm Associate Director of Research at the Asian Banker. And this morning I'd like to share with you findings from the 2012-2013 Excellence Award Programme. At the core of Asian Banker's business is a benchmarking business from which the Excellence Programme stems and from which we publish a lot of data that we share with the industry. Clearly, to continue developing these benchmarking models, we do need to continue our conversations with you and with the industry, as we try to determine how successful you are. We want to be able to identify and evaluate how you respond to the threats and opportunities that you see in the marketplace, many of which, clearly probably are not very visible today. So we can help you benchmark these to see what you should be looking at. So on our agenda today, we are asking, are there banks which have moved significantly towards customer centricity over the past 2 years? What banks are focusing on in regard to products and functional areas? Who are the top 10 banks in the region in 2012, 2013? And where are the greatest gaps, in terms of excellence in what they do? Where do we see the greatest upsets when we look at these, the scorecards that we develop for the different countries, in terms of retail banking compared to last year? And we're asking, is increased regulation affecting how retail banks are responding? So when I've talked about a balanced scorecard, and as I say, it's at the core of what we do. And what we're doing is we're assessing and identifying retail banks that demonstrate a sustainable and profitable franchise based on sound processes and infrastructure capabilities. We make our assessments both quantitatively and qualitatively. And as I say, we base it around this scorecard where we have drawn up 10 criteria that we weight. And they are value of the franchise, the financials driving the cost out of the business, sustainability, keep that business coming in, the recurring business, strategy, the approach to sales, risk management, driving efficiency through process and technology, your distribution capability, people skills, and ethical banking. And as I say, when we draw these scorecards up, we can start to look for trends. And that's what we seek to share with you. As we assess banks, we believe that they move through 4 key phases. The banks, we think, in the region move from a product focus through to a sales focus, then into a market share focus, and finally now they're moving into a relationship focused. I think it's fair to say that most banks in the region are at a market share focus. So you see things like, unbridled price wars or undercutting, perhaps slightly irrational behavior. But the smarter banks have moved through this now into the relationship focus. And we see this particularly in countries like Hong Kong, Singapore, Australia, and increasingly here in Korea too. These are highly competitive markets, and the winners have had to do something very different, which has moved them into this relationship focus. So when we look at the submissions that we have received through the program over the years, we can start to discern trends. So back in 2010, 2011, it was very much there was a lot of product focus, but you were also beginning to see the emergence of alternative channels. And this alternative channels focus was very prevalent last year from the submissions that we received. What was happening in internet banking and mobile banking. Clearly this year we're also seeing a lot of submissions around internet banking and mobile banking. Excuse me. But even more so, we're seeing a lot on branch innovation and social media, because through although alternative channels continue dominating in the submissions we receive, we are seeing a lot more happening at the branch front. And this, of course, is beginning to see the move towards the relationship focus that has really come to the fore in the submissions received this year. So within this branch, so what we're seeing is the integration of the branch banking experience with the one customers are used to seeing in their alternative or electronic channels. And so that is becoming the main focus in the branch. So branches are deploying concepts centered around lifestyle and digital experience, using things like tablets, PCs, zoning, etc. But the other point, I perhaps just go back a slide. The other point I should have made here is, deposits still remain a strong focus. And of course, that's all about liquidity. But in terms of what you do, that's about retaining your customer. So then we come to the actual scorecard for 2012-2013. What we have here are the top 10 banks across the region. As you can see, it's Standard Chartered in Hong Kong is the leading bank in terms of the score, achieving the highest score. But there are banks in there from Hong Kong, Singapore, Australia, India, Thailand, Malaysia, and China at the bottom there. But as we look at this balanced scorecard, the key that we need to look at is where the gaps are arising. The areas where you're having the lowest scores, even amongst the top 10 banks, and those are in the area of their financials, sustainability, and sales. I'm losing my place here. So that is where. The leading banks have been focusing on risk, driving cost efficiency, through their technology and processes, and focusing on their strategy. But as I say, where the gaps are now are financials, getting those costs down, sustainability, hanging on to those customers, pushing up the fee income, for example. And the third area is in sales. How can you drive more customers in so you can make more money? When we look at the scorecards for this year, we ask, where did we see the greatest upsets occur? There were 3 countries that came to the fore: Singapore, Malaysia, and UAE. So in UAE, Emirates NBD displaced ADCB, and the story there was very much Emirates NBD seeing the fruits of the merger that they undertook a few years ago, deriving benefits from the scale that they achieved, and then of course they've driven cost efficiency since. In Singapore, OCBC has overtaken UOB, and this is a result of their revamped branch strategy that's proving so successful for them. And in Malaysia, Maybank has overtaken Public Bank, and this is very much a sales story that's enabled them to take the lead there. So the next question then is, what has been changing? What new threats are out there that you have to respond to? And one of the things we are seeing is a slew of regulation across Asian countries to control individual indebtedness, as well as controlling overvaluing in mortgage markets. So, for example, talking about mortgage market, housing regulation is being seen in Taiwan, Korea, Singapore, to dampen any housing bubbles. So you're seeing things both on a regulatory front. You're being limited on mortgage LTV, but equally also on tax fronts, high transaction taxes and capital gains taxes. In area of personal loans, we're seeing more regulation in UAE and Brunei, for example. And here it's perhaps a limit on the maximum loan to a person. And in other countries, regulation on credit cards has been focused upon. Indonesia, Brunei, Malaysia, where rate ceilings have been set. And of course, retail banks in each of these countries have had to respond because it's had an impact on their business, and the impact has been negative. So, for example, revenue generation and profit, it's had a negative impact on there. It's impacted, the ability to grow loan growth, again, a negative impact. So, number of applications, eligibility and loan growth, as I've said, all negative. So how in turn, have banks responded to this? Well, what we've started to see then in response is further segmentation by business line. So as this chart is showing, banks have been moving, just from a blanket approach to getting as many customers as you can to initial segmentation around assets under management or straightforward demographics, into more complex segmentation, perhaps based on lifestyle or attitude. And you see this sort of segmentation in countries that really have highly competitive retail markets. Australia and Singapore are very key there. So just winding up, under this year's excellent submissions, we have seen a lot of innovation in retail banking. And I've just pulled out here some of the key submissions that were received in terms of their, that relate to innovation. So we received the N-Wallet submission that many of you who perhaps joined the Future Tour yesterday were privileged to see from Hanok here in Korea. And indeed in Kookmin Bank, at the Rockstar branch, we thought that was an extremely innovative approach. Standard Chartered in Singapore have come up with a state-of-the-art security token that they use for their internet banking. Again, another excellent example of innovation. Westpac in Australia has sought to help their tradesmen in the mobile payments area, reaching out to them so that they can check a payment has gone through whilst they're on the move. And in Malaysia, Alliance Bank have focused on SME banking through a CRM initiative to drive sales. The common theme of all these innovations is that they're spearheading the move towards out-of-branch customer engagement. Smart banks want to be present where the customer naturally interacts. And I think that's the key message we need to take from our findings here this year. So that completes my presentation. Thank you very much indeed.